All right, let's dive right in. Today, we are cracking the code on what is, let's be honest, one of the most confusing crypto markets we've seen in a long time. If you've been looking at the charts and feeling like the price action is just completely random, well, you're not alone. Let's make some sense of it.
So this is the big question, right? It's on every trader's mind. The market seems to shoot up on what looks like bad news and then tanks on good news. It feels chaotic, totally unpredictable, and frankly, it can be pretty frustrating. But what if there's actually a hidden logic to all this madness? That's exactly what we're going to unpack today.
You know, the root of the problem is that the market is caught in this massive tug-of-war. On one side, you've got the Fed talking tough about interest rates, which is like a heavy anchor on riskier assets like crypto. But then, out of nowhere, you get a shot of good news, like the US canceling some tariffs. And what's the result of all this pushing and pulling? A market that's just stuck, churning sideways and not really going anywhere fast. And to make things even trickier, all the old playbooks, they're basically being thrown out the window. Bitcoin's relationship with the stock market is, on again, off again. It's even started moving in the same direction as the US dollar, which, if you know your market history, is just plain weird. All of this means the traditional models that traders have relied on for years are breaking down, forcing us to find a completely new way to look at things.
Okay, so to get some clarity, we need to change our perspective. First up, let's grab what we'll call the telescope and zoom all the way out. When we look at the big picture, the long-term monthly charts, a very cautious and even a bearish story starts to take shape.
When we're looking through that telescope at the monthly chart, three pretty alarming signals pop out. First, history shows that after these huge rallies, the market often just goes sideways and consolidates for like 6 or 7 months. Second, the current monthly candle has what traders call a really ugly shape. It's often a classic sign that a top might be in. And third, and this one is maybe the most important, is the volume. It's just drying up.
And that third point on volume, it is absolutely critical. What we're seeing is the price kind of drifting higher, but it's happening on super weak trading volume. In trader speak, this is called a divergence, and it is a massive red flag. It tells you there's no real belief, no real power behind this move up. That makes the whole thing really fragile and could lead to a pretty sharp reversal. So the takeaway from our telescope view is clear. Be careful out there.
Okay, so if the long-term picture looks so sketchy, why isn't the market just falling off a cliff? To figure that out, we need to put down the telescope and pick up the microscope. Let's zoom right in on the forces that are pushing the price around day to day right now.
The absolute key to this short-term puzzle is a concept called liquidity hunting. Basically, this is where the big money players, the whales, intentionally push the price towards specific levels where they know tons of traders have their stop losses or will get liquidated. Why? Because by triggering all those orders, they can scoop up that liquidity and profit from the chaos they create. This is the real engine driving these short-term moves that seem so random.
So the logic here is actually pretty simple. If the whole game right now is a hunt for liquidity, then the most important question we can ask ourselves is, where's the biggest pool of money sitting right now? Where is the juiciest target for these hunters?
$3.3 billion. That's the number. It is a staggering amount of money, and it's all piled up in one very specific spot in the market.
And here's exactly what that means. That $3.3 billion represents a massive group of short sellers, people betting the price will go down, who will all be forced to buy back their positions if Ethereum's price gets to around 4080. For those liquidity hunters we talked about, this is a giant flashing neon sign. It acts like a powerful magnet, just pulling the price up towards it.
But who's actually doing the buying to push the price up? Well, the on-chain data is fascinating. It shows that the number of smaller retail traders betting on price going up is actually going down. They're getting scared and closing their positions. But at the exact same time, the total value of long positions held by the big whale accounts is going up. The big players are quietly buying what retail is selling, a classic sign they might be getting ready for a push higher.
So we have these two conflicting views, right? The long term is bearish, but the short term is bullish. How on earth does a trader actually act on that? Let's move on to the playbook and see how this all gets translated into a concrete action plan.
Now, the memo starts with a piece of advice that is absolutely crucial. In a choppy, sideways market like this, taking trades right in the middle of the price range, it's a loser's game. It's basically a coin flip. The professional approach is to have the patience to just wait for the price to reach the key levels, the extremes of the range. So for Bitcoin, the plan is really a two-part strategy. First, there's a potential short-term long trade. This is to try and capitalize on that hunt for liquidity we've been talking about, a quick get in and get out kind of move. But then, once that liquidity is taken, the plan flips completely. The more patient trade is to then look for opportunities to go short up at that higher resistance, betting on a move back down that lines up with that bigger, long-term bearish view.
The plan for Ethereum is even more focused. The number one target is that 4080 liquidity magnet. So a trader might look for a long trade on a breakout, with that level as the clear goal. But just like with Bitcoin, as soon as that target is hit and the short sellers have been cleared out, the logic flips. The plan then becomes to look for short entries around that same zone, expecting the price to get rejected.
Look, having a great plan is one thing, but as any experienced trader will tell you, execution is everything. A brilliant strategy is totally worthless if you don't have the discipline to actually follow it. And that brings us to what might be the most important part of this whole memo, the core rules for risk management.
And it's a serious question. In a market that feels like it's designed to chew up and spit out emotional traders, how do the pros not only survive, but actually thrive? Well, it all comes down to a strict code of conduct. And that code really boils down to 4 simple but powerful rules. 1. Have your own system. Blindly following alerts from someone else is a recipe for disaster. 2. Stick to your plan. No emotional, heat-of-the-moment decisions. 3. Always prioritize risk to reward. You only take trades where the potential upside is worth the risk. And 4. The big one. Trade without emotion. This is a business, not a trip to the casino.
This quote from the memo really just says it all. The goal is to become a systematic executor, a machine. It's about taking your ego, your greed, and your fear completely out of the equation and just executing your plan. That truly is the secret sauce.
Okay, so let's bring it all home. We've looked through the telescope at the big picture and through the microscope at the tiny details. Now it's time to tie these two conflicting views into one single coherent takeaway.
This really gets to the heart of the paradox in the market right now. The telescope view, the long term, is flashing serious warning signs. A deep correction is very possible. But the microscope view, the short term, is clearly bullish, driven by those whales hunting that huge pool of liquidity. And the job of a professional trader is to live in that conflict, to navigate the short-term opportunities while always respecting the long-term risks.
And that really leaves us with one final thought to chew on. In a market this tangled, pulled in 2 different directions at once, maybe the most powerful strategy of all isn't some fancy indicator or a secret algorithm, but just simple, old-fashioned patience. The patience to wait for your perfect setup and the discipline to act without hesitation when it finally arrives.